Yo, I hope everybody was enjoying their Christmas and had great food, hung out with family and loved ones. So today we're going to be talking about some essential pairs that for the 2019 correction, if possibly the market's going to do a reversal and if price is going to go the opposite way. Okay, so we're going to be looking at something a little different today. We're going to be looking at market percentages. I told you guys that I'm going to be having this in a different format for today because I want to show you guys exactly how I basically define my aspect of trading and how I find the strategies as well. Okay, so for you guys that are new to my channel, because I saw that I got some more subscribers, thank you guys so much for subscribing. I'm a forex analyst and I do also crypto technical analysis as well. I focus mostly on the US dollar, the Japanese yen, the Great Britain pound, and I focus on Bitcoin and Ethereum. What I do is I'm a counter trend trader and I'm a reversal trader as well. So that's what I mostly focus on my trading strategies, and from there we'll get straight into it. So as we can see, you guys, that price is now, I'm going to go into the 15-minute chart. So we're going to break down price on the Actually, let's focus on the euro dollar first, and we're going to get straight into where we're at right now. Okay, so I'm going to actually take this to the daily chart and give you an overall perspective of where I feel like the euro dollar is going to be going in the next couple of months, and then from there we'll be able to dissect it and go further into structure and price. So as you can see, that market is now testing that 23.6 Fibonacci retracement, where we've been in that consolidation for about 92 to 98 days. Okay, so what I like to see is that since we had this consolidation to the downside, I want to see that price is going to eventually have a rocket or have a nice bullish breakout to the upside, testing this next Fibonacci level, which is the 38.2. And then once we see that level, I want to see a consolidation and obviously have that support to try to retest these highs at 61.8, causing this M formation structure where price will come back, right? So this is definitely a more longer term perspective, you guys. This could possibly between, the whole of 2019, or even to the mid-August of 2019, this formulation. So I do believe that price of the euro dollar is going to be higher going towards the 2019 and even towards 2020. Okay, reason being is that obviously when we have lower lows or on the US dollar, we see higher highs on the euro dollar, but we take that into consideration because back in 2008, obviously when we had the crash, also the euro economy was affected as well, right? So we're not obviously always having that polarity, right? And we're not always basically making that firm determining factor. This is obviously just with most speculation investors do take this into consideration, right? Just like when you have treasury yields, we're not always going to go, if the treasury yield is going higher, the dollar doesn't mean it's always going higher, but it's a high probability that these things are going to follow each other, right? So when we're looking for these setups and strategies, I wanted to see from a macro perspective, right? What is the euro dollar looking at on the daily chart, right? So we see that retracement right now, and like we said, it's been consolidating. We see the fib retracement, that support level, and because it's the end of the year and we see that the support level has been showing structure for the last 90 days, we can have a defining understanding that price is probably going to settle at this 23.6 reversal and is not going to break it, right? So from here, we're going to be looking for upside momentum for the euro dollar. I didn't take a signal on this trade just yet, just because I was a little skeptical, because if I go to the smaller time frames, I can see price actually having more of a W formation being formed, and I see that price could probably break out of this to the upside, as we can see, but it possibly might have more down momentum. But at this time, I'm not really going to make that determination, just because I don't see a nice risk to reward at this point. I mean, possibly I also see price also making higher highs as price is consolidating, but is now making, like, building up pressure to go to the upside. I don't want to risk going. I feel like the pressure, right? If we take into consideration the volume indicator, pressure is being built for maximum upside, right? So I'm not really like looking for this reversal to the downside as much more as I am to the upside. So as well, you guys, I used the 50 and the 200 moving average in my earlier videos. I told you guys that. So I'm going to put the EMAs real quick back on the charts. I was doing a little back testing, so that's why they got removed. So let me just set that up for you guys, and we'll go from there. So the reason why I'm actually seeing price move into the upwards direction is because we can see that the dollar is going to be going and obviously having a correction as of right now. So with this correction, we can see that price is now moving to more to the upside. You guys can see now that price, the moving averages are bundled up here, showing you that there's a lot more support. And let me actually just change this because the duration on this, or the color, is very not visible to you guys. So let me just change this. Perfect. All right, so I'll do yellow, I guess, for the day. So we can see that the price is now bouncing and making that W formation. So I don't want to take a sell at this time, just because market price has been or is already looking like it's building up pressure, and we are getting closer to the end of the year. So we possibly might see it retest these lows, and if I do see it test the psychological level, which is 113,750, and if it doesn't break, then we will take a short position, because I know that considerably price will have to test a previous low or get close to a previous low before we get back into the uptrend. So what I mean is that we might see it test this level, and if I see it that doesn't break, I will take a short position for about 100 pips, where we're going to be able to execute about 100 pips. So I'm going to wait for that retracement, and then we'll be able to go from there, right? So this is basically retesting this low where price might have to fall back one more time to retest these lows for about 100 pips. So this would be some great risks. Obviously, we're only going to be exposing maybe 20 pips like maximum on this trade. So I'm going to have that set up for you guys if this possibly does go into the direction we are looking for that market reversal. So I'm really excited, especially because the market is definitely going to be killing it. And good to see you, Michael. Always good to see you, brother. So what I like to see, guys, is that price is going to be going into the upside in the near future. As we just said in the daily chart, where price is going to be having this nice consolidation breakout, right? And obviously catching these previous highs of March of 2018, which is earlier this year. And then we'll see that consolidation, and then possibly see that reversal to the downside. So obviously this is just all an opinion, but right now a lot of leading factors, fundamental and technical, are looking at this as a brighter structure, right? So as if you guys are in our Discord, we do have a trade with the Griffin and Pound. We got out a little early on my end, but we're up around like 92 pips on this trade right now. We caught it at 127,350. That's on our Discord signal. So if you guys are on that trade, we did catch around 92 pips right now. We might see a little bit of a drawback, maybe coming into Wednesday, right? And then having that consolidation, or Thursday, apologize for that, going into Thursday, and then having that consolidation, and then testing maybe this psychological level, which is maybe 126,750, possibly maybe go a little higher than that, and then having that retest to the lows and testing back on the previous structure low right here, where we then might see price retest those lows at December 31st and then drive price higher, right? Because the market loves to make lows, tries to retest highs, and then it breaks again, works off the lows, and then it likes to reverse. So this is what I put for this market consolidation market trap 5-day breakout. So what I mean by that, you guys, is that the market was consolidating for about 14 days, basically trapping liquidity on one side. And this is where a lot of I just got off the phone with Forex.com. Basically, I'm doing something with Forex.com in the near future where I'm actually working with them, and they were telling me about their market maker, right? So a market maker is basically a proprietary, or not a proprietary. Don't mention that to them. They'll laugh at you. They're a liquidity provider, right? So these liquidity providers basically are giving you money to make trades, right? Because you're trading on a marginal capital. You can do 100 to 1, 200 to 1, so forth. So what happens is that a lot of these market makers, what they do is that they're not essentially manipulating the market as much as we think, but more so hedging against you, right? So I called him out today and I told him like, well, you guys are still like stop hunting and basically manipulating price on the emulated market, trying to induce a lot of buyers and sellers for a certain amount of time, and then you stop them out. And then he like had to correct himself. He's like, well, not kinda. No, it's not like that nowadays. He said to me, and I'm like, oh, sure, right. So like, I'm like, you guys are traded on the public market. You guys have made, hundreds of millions of dollars. Like, I know that this is a formula that you guys aren't going to, you're not going to reinvent the wheel, right? If it's not broken, don't fix it. So like, when I was talking to him, it made me like, it made more sense, right? So what I'm teaching you guys, I'm telling you, I just got off the phone with one of the one of the head guys at Forex.com before I got into this live stream earlier, and it was just a fascinating conversation with him because he basically validated my statement how market makers are basically not proprietary. I keep on thinking proprietary. I was thinking of my buddy who is a proprietary trader. We think about how they're the liquidity providers, but they are trying to hedge against you because you statistically shown that you are not going to make a lot of money in the market, right? So what this does is that they'll try to give you time, right? Because even if they give you this, like this is what they do is that they give you time. Time is the most valued asset, right? This is the most valued asset in the universe. And what they do is that they give you all this time, right, to trap you into one area, which is definitely where a lot of people make a lot of mistakes. So they're giving you about this right here is about 15 days, right? I mapped it out earlier for you guys. It's about 14 days and 2 hours, right? So they're making lower lows, lower highs, right? Consolidating, breaking pressure. Obviously, what they did is that they want to test these previous highs, right? Once they build up enough market price, which is trapping these buy pending orders, because people think price is going to just skyrocket and go up, they'll then drive price the opposite direction, right? Towards where people's stop losses are or trailing stops and so forth, and they'll just stop you out, and they'll keep on doing that until they feel like they have gained enough profit, and then they'll remove price and reverse price. That's when a lot of the time the trades will then go into the opposite direction and move price into the direction that they always wanted to, right? But they want to obviously acquire as much profit as possible before they do that, right? Because they have market shareholders, they're traded on the public market as well, and then they have a lot of banks and institutions that work with them so they can have maximum liquidity that they're able to expose, right? So the thing about the emulated market, which is essentially when you put your trading capital in a broker, you're trading on an emulated market. You have an A book and a B book, right? So A book essentially is going to be a people that are trading that are profitable over time, right? Say that you have I forgot how much time you have to show before you're an A-book trader, but there's an A-book and a B-book trader. So this A-book trader is basically where they're going to believe that these people are right? They're going to not hedge against them, but they're going to trade with these people, right? So they're going to have obviously lower pip, lower spreads. Obviously, they're going to be filled in their orders a lot quicker. I mean, you get filled in automatically in the forex market, so a little different. But and then obviously they're essentially better traders, right? So they're knowing that they don't need to hedge against them because they're not a liability onto their books, right? Their portfolio. So what happens is that price is going to go in most of the direction that these A-book traders do. B-book traders are a little different. B-book traders are specifically the traders that get in the market. They're trying to learn how things go, and they are a lot of people that lose a lot of money really quickly. So what happens is that they have a statistic that it's about 90% of these people lose their account in 90 days. So what they do is that they'll give you high value leverage, right? About 200 to 1 to basically induce you to think that this is going to be a gold mine, right? And essentially it is a gold mine if you know what you're doing, but if you don't, then it's a double-edged sword and you're going to be bleeding, right? So the thing is that what I'm teaching you guys, and the reason why I'm just doing this I know that you guys heard a lot of this before, is that it's just good to understand this, because once you understand this, now you can look for formulations that are going to be profitable in the long term and not look for very, very low term success, right? So, because a lot of people are, it's just, for me at least, this is where I want to be professional in, right? Professional trader. It's not just something I want to be doing, short term, right? This is something that I'm passionate about, right? So what we look for, you guys, is these strategies is that what I'm teaching you is specifically based on how to work with the market makers, how to work with the people that are driving price, essentially. So what they do, like I said before, is that they're going to give you time to buy, right? They're going to give you time to buy. They're going to consolidate price, give it 14 hours. And then what they'll do is that they'll take it back in half of the time, or a quarter of the time, or a fifth of the time, where then the price will then go into the opposite direction of where they will where they trapped you, obviously hitting your stop losses, and then they'll move price to the opposite direction, because this is where the liquidity obviously has been formulated, right? Between this area and this area. So what do they want to do? What do? They then, so I'm just going to remove all this because this is obviously a little too much. So let's go back to price previously, right? So if we're looking at the Great Britain pound and we're looking at where price was in this zone, right? Price is in this zone for about, let's get through. For about 18 days, right? So 18 days is when price was basically in the markets. So what happens is that after price was in this market for 18 days, they took it back. Essentially, they took price back, or they dropped price for about a day and 15 minutes, right? So the people that were thinking that this is going to be the lows, because what they were doing is that they're basically having a lot of these, I even got caught in this. I remember I had a couple bad trades on the Great Britain pound earlier last month. Is that, what happened was that they're trapping a lot of these orders, right? And what they do is that they'll just do it momentarily, where they'll come up, they'll hit your lows, hit your high, or hit your highs, hit your lows, come back, consolidate, hit your lows, hit your highs one more time, consolidate, and then hit your highs. And then after they build up probably enough liquidity from the downside, or from the upside, excuse me, then they'll drop price and then shift the zone, which is called a zone shift, where price from one area will break, and then what they will do is that they'll shift price to basically level out an area, because now that area is not going to be a consolidation area, or that level has already been filled, right? So we got to think of it like a video game, right? After you finish a level, you get to the next level, right? It's the same thing. It's a simulation. So all they're trying to do is essentially say that price evidently is going to go into an area for a certain amount of time, where you're basically having your battles in the market, ups and downs and so forth, and then they're going to drop price and then shift that zone. So then you go into another area, right? Another price range, right? And what they like to do is that they'll work off these zones, right? They'll retest these zones and levels of price before they go to an opposite area. So what I'm trying to say is that price will definitely, will go from this range now. So this range is where price is at right now, right? And then we can see that price definitely moved into that previous zone area, right? Where we see that break and retest. So that area where they're trapping those buy orders, right? They're trapping these buy orders, just like they trap these sell orders right here. They're doing the same thing right here, where they're trapping the buy orders. So what they're going to do is drive price down. So they're going to hit your stop losses, right? Where all the people are having their trailing stops, where they feel like they're going long, and then they're going to hit your stops, right? Consolidate price, give you time to basically formulate a strategy, and they might even go lower. They'll go as low as possible until they feel like they have enough people trapped, right? And then once they have enough people trapped, they'll have, usually it comes around fundamental data time. Usually it comes around, the end of the month. All these things are super correlated. A lot of these times, like if I were to look at a consolidation period, I'll look at the end of the month. It'll be like GDP, or it'll be non-farm payroll, or it'll be CPI numbers. All these are so formulated because what they do is that they'll use those fundamental events or fundamental structures to then boost price, and then obviously boost the average daily range to trap the sellers or buyers in a way, either good or bad, depending on what side you're on in that market, right? Just like I said, the A book or B books, it just depends on what side of the trade you're on, right? So what we're going to be doing is specifying on how to get on the other side of the market, right? Be an A book trader, right? So that's the best thing on how we are able to make probabilities go to our favors, by having a highly percentage gain strategy, right? So this is where we can be able to, I'm going to remove this one more time So this is where a lot of the consolidation comes into play, right? So I just want to let you guys know that before we move forward into price and where price is going to go. Okay, light bulb is activated. When consolidation is in a particular area for an extended period of time, they go in the opposite direction and retrace the actual direction they intend. Yes, exactly, Michael. That's awesome. You definitely... basketball analogy, they pump faking. Exactly. Just like Michael Jordan. Why is Michael Jordan one of the best basketball players ever? It's because he was always a great pump faker. He was always good at like tricking you into a certain direction, and then he'll go. He was slick. He was agile, right? He had a very good mobility, right? He was very malleable. That's the thing about the market. You have to be very malleable with your conscious mind, because if you're very stuck on one type of formulation or strategy, you're not going to be able to adapt. And the thing about just life, you have to adapt, right? We're survival instinct human beings. We have to adapt to situations, adapt to different structures, environments, and so forth. If we can't adapt, then we're not going to be able to survive. And that's just the human evolution. We have to survive, so we adapt. So exactly, Michael, that's such a good analogy. So let me just go back to where we're talking about our price is. So if we can even see the same thing with Bitcoin, right? So if we look to the Bitcoin chart right here, and we took away some of these drawings as of right now, we'll be able to show you guys exactly what I'm talking about with price. So as we can see, that price made this M formation, right, at the top of psychological level of 4,200, right? 4,200 and 4,250. That's basically the psychological level that we want to see it. And you see that price trap these buyers right here. Once they trap those buyers and they trap these buyers right here, they drive price down, right? Where we can see that probably price is going to come up, right, one more time and then come back down to about 3,500, right? Because 3,500, that will give them enough people to start selling right before they drive price back up to the upside. And you know what's so funny, guys? It's going to happen literally on the 31st probably, right? 31st, January 1st. This is where they'll have enough people in the market to basically trapped in these levels. And then what they're going to do is start the zone hop. This is where I feel like Bitcoin is going to have a nice run to the upside. And obviously I'm taking this into consideration, for the signal. So what I want to see is possibly price come down to basically this 3,500 range, test back, and then make that consolidation peak formation low, and then drive price higher, right? So I want to see price have one shoulder, make a head, and then make another shoulder, and then come and drive price past this previous barrier. So that's where I see Bitcoin going in the near future. And obviously I don't know exactly where price is going to go, if it's going to test this test at 5,500 possibly. I don't know. I'm going to just obviously just take that into consideration where price is possibly going to be for Bitcoin. So that is a huge, if it does formulate price here, I mean, I'm going definitely heavy onto the upside, because I know that what's going to happen with the dollar, right? With the dollar right now, as we can see, is that price is retracing to that upside as of right now. As you guys can see that I'm up right now on the USD Japanese yen. And then I took that, reason why I'm long on this position is because I know the market's going to retrace. Because what the thing is that there's these things called books on the market, right? And these books have to be fulfilled by the market makers, right? And for filling on their books, they have to usually close out at an even number. And an even number, or statistically a value number, usually ends on a psychological number, right? Just how the human psychology works. So what we want to do is that we amplify our trading strategies based off these terminologies and psychological aspects. And what happens is that when we see that the market price is consolidating, especially if we saw a big breakout, which we did from 113 down to the downside, we saw this huge shot. I want to see retracement, because I know that price is going to be, a lot of people are short right now, and if they want to make money at the end of the month, they want to make sure that the price is going to go into the upside, obviously the opposite direction that it was, right? So I see price now trapping these sellers that were down here, right? That got in this breakout. And then now they're going to consolidate price, break it back to 12 500, and then after this retest of this break, right? Because what does the market like to do, you guys? It breaks, right? Market breaks an area. It breaks an area. Oh, that's a bad example. Don't listen to me on that one. You guys understand, the market, like when it breaks an area, it loves to retest. Like that's just essentially how the market has always worked, where it comes into an area, right? It breaks that level, and then it tries to retest that level to see if it's still valid. And then after it's not valid, they'll continue with the direction. That's why it makes a swing low and swing high, right? Market breaks an area, and then it tries to retest that area. After it's not valid, it'll keep on continuation with trend. That's where we see that swing low and swing high all the time. So that's the reason why I kind of went crazy on the graphs right now. So let me just remove some of this stuff. So basically, this is what I made my hypothesis out of for price, right? I saw about a nice 200, I want to say 220 pip to the downside, about 200 pip range to the downside. And after I saw that consolidation at this area, right, I formulated a hypothesis that market's probably going to retest this previous high because they're obviously trying to build as much liquidity before they're going to drive price the opposite direction. So what they do again is here, they do that consolidation again, and then they make that peak formation, right? That peak formation to drive buyers or sellers, right, into the market one more time. And then they're going to consolidate one more time, right? Possibly today, they're going to consolidate. And then by tomorrow, right, they're going to have price already built up to the upside, retesting these stop loss levels that people are having their trailing stops until they stop them out of the market. And then once they do stop the previous sellers out of the market, they'll keep on driving price to the downside. That's where I came up with the same hypothesis when it comes to Great Britain pound, where we got on the 15-minute chart the same exact thing, right? So this is why I come up with these scenarios, you guys, because I'm not essentially just making this up and like just having this this just out of my head. I'm actually, thinking of this. I'm actually using what, strategies a lot of market proprietary investors use to basically make profit off the retail traders, right? Because we're only 7%, right? 8% at most of the liquidity of the market itself. Like all the rest are market makers, ECNs, ECBs, and basically Retest deck, basically institutional bankers and stuff like that. We're a very small, minimal percentage people, right? So as you can see, like right here, this consolidation, right? Trap them in the direction, just like, and I mapped this out earlier, so I'm just gonna re-establish what I was talking about. So obviously, 12 days, 13 days, right? They're gonna trap, but it's more so around 16 days, but we'll go with the 12 days, and then they're gonna, exactly what they're gonna do. You see trailing stops here, 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 here are all stop losses. We can't see them, right? It's not a valid, because we're not proprietary traders, but they're there. Trust me, they're there. So what they do is that they'll go and hit your stops, 1, 2, 3, and then after they hit all your stops, then they'll redirect price on the direction that was previously annotated, right, which was the upside momentum. So this is a big thing, you guys, and this is why a lot of levels, that's why the market works in levels, okay? So we can use any price range use any structure, right? So we can go to, for instance, we can go to, well, let's just take this into consideration, right? The price is literally doing exactly what we're saying, but on a trend, right? That's why I'm a counter trend trader and I'm a reversal trader. Reason why I'm a counter trend trader and a reversal trader is because the percentage of loss is very minimal depending on your strategy, right? So if I'm on a 15-minute chart and I'm a trend trader and a reversal trend trader, I'm looking for basically like 100 or up to 120 to 140 pip moves, right, between a day and a half, right, or a 2-day period. If I'm looking forward to hold a percentage or a value for more than a day or more than 3 days, I'm looking for a 250 pip execution, right? So if I'm looking in between these circumstances, but my stop losses are very, 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 very tight, right? I'm not looking for huge stop losses. So for instance, right, we have price consolidate, right, drives to the low, then we have 1, 2 sellers, right? These sell orders are basically market is going to sell for the downside, right? So we have 1 and 2 selling positions, right? Now people's stop losses are trailing, right? And we have 1 hit to the stop losses, comes down, 2 hits to the stop losses, and then drives price down, right? And then now people's stop losses again are being activated, right? So then what do? They see these trailing stop losses. What they do is this: they consolidate price, hit your stop losses by this huge spike, hit your stop loss that was trailing, and then they open the trades that were looking to go long at this consolidation area to falsely, to manipulate the price. And then what they do is that they'll give you time at this area, or then they'll trap you, right? They'll trap you by giving you a lot of time. You know it's a trap when they give you when they give you a lot of time, right? So they give you 2 days and 15 minutes. This is the 15-minute chart, you guys. So we're talking about intraday traders. So they're giving you, basically 2 days to trade on this market. Or if you want to even be more specific, they're giving you about 3 days to trade, go higher, right? That's why they give you this. They're giving you this to basically have as a trap for those pending orders for the buy, right? Because people think that price is going to go up and then it's going to consolidate and break and test these levels, right? But we're on a downtrend. That's why we use moving averages. That's why we use the 200 and the 50 moving average, because that gives you an amplify of where momentum of price is going, right? So what we like to do at this time is that since we see that consolidation, since we see price moving in a downwards position, right? And we see that obviously that trap and the consolidation again, and then again, they're giving you that time to buy, then they'll take back price, and a quarter of the time they drove price, right? So let's see how long it took them to basically manipulate price. So gave you about 3 days to buy, right? About 3 days, right? 3 days, 13 hours, right, to buy. And then they drive price off the market by giving you, in about 6 hours, all of these stop losses that were being formed for the upside, all these buy orders were now completely stopped out of the market in 6 hours. It took them 3 days to drive price one area, and you have 6 hours to stop them all out. So I hope that you guys are understanding how this is more working when it comes to price itself and how the market is formulating in general. And obviously, if you guys are liking this, please let me know in the comments, and hopefully you guys are getting a lot out of this, because this is what essentially changed my life. And I'm going over this. I think I'm so passionate today about it because of the just talking to forex.com and obviously possibly doing something with them later on, like, and just having this, totally come into fruition is just very, it's just obviously something that I've dreamed about. So, so same thing happens again, you guys, where price again, they'll consolidate. And it's funny how a lot of people don't see this after a while, right? They'll consolidate price, for a certain area. They'll trap the buyers and sellers on both ends. So what they will do is that, let me just get this one more time. They'll trap the sellers, they'll hit your stop losses, right? And then they'll trap the buyers. They'll hit your stop losses by driving price, and then they'll consolidate one more time before they drive price to the opposite direction and continue the trend. Because this is how they make money. This is how they're making a lot of money, right? Because if everybody was just swing trading and going with the price and everybody was making money, they wouldn't have a business. They wouldn't be a multi-million-dollar corporation. They wouldn't be like, being traded on the public market to have all these bankers and banks backing them up on their trades, right? This wouldn't be possible. That's why the market has to be like hard, right? Because if it wasn't hard, everybody would essentially be making money. So that's why when we're looking at this, we want to be able to specify and know where price is going using these strategies we're looking for, right? We want to look for these elements, right? We want to look for market trap. We want to look for price consolidation, or no, excuse me, time consolidation. It's about the timing. Everything's about the timing. Sorry, I spelled that wrong. Consolidation. So price consolidation, and then we have stop hunt or market, or then we have a market drops, right? Market drops are basically hitting your stop losses, right? And then we have what we like to see, wicks and time and pending orders, right? Wicks are pending orders hit, and this is basically what we're talking about here. Your pending orders are being fulfilled, right? And then we want to see what also we like to see is that price is at an angular support or resistance. Sorry, my spelling's off today. So this is where we considerably are looking for price at this time to value, right? Market trap, which means what we're looking for is this, the timing, right? The time consolidation. We're looking for time. It's all about the time because this is what makes people drive, right? It's the time. This is the trap, looking for the time, looking for the market drops, right? Looking for the market drop right next to it, right? Boom, 120 pip drop right after consolidated for 3 days, 6 hours took back, right? Wicks, looking for wicks formations. Look at, boom, perfect formation of a wick. Pending orders are hit, right? Having all these orders that are filled for the buy are being filled, right? And then they'll come back and test it one more time. Then you have angular support and resistance, which are these moving averages. There are angular support and resistance. That's why when you're under the 200 moving average, don't go long. Go short on if it's under the 200 moving. If it's above the 200 moving average, you want to go long, right? You want to go with the trend, but you want to find the lows and the highs of that day, week, or month, right? Because lows and the highs, daily, weekly, and then, dang, can't even spell weekly right now. Weekly, and then obviously the month, that's where we're going to see price range value, okay? The price range value is basically between these three elements, right? The day, the week, and the month. Because the price is going to move off the lows and the highs of price in these segments, the day, the week, and the month, right? So this is where we can formulate where we can buy and sell, right? This is why we took a short on the Great Britain pound right now on previous or on standard price right now is because this is where price basically is showing, right? We took it at that high, right? The high of the market. So we took our position here, which was at roughly 13. We took it here. Let me go to the 15-minute chart. Can't even see it. Perfect. So we took price around 13.50, right? We took that trade. You guys will see in the Discord group, I took that trade at 13.50, right? That's exactly where I took trade. Why did I take it here is because I knew that consolidation of price has been moving for about 3 days to the upside, showing a lot of wicks. What are wicks, you guys? They're opening the pending order. So I know they're not going to work off this area and go higher. They're going to work off this area and go lower. So I knew that this was going to be the high of the week. So that's why I took this trade to the downside, right? So once I took this trade to the downside, because this is the high of the week, I can now formulate that this is going to give me a super good risk to reward, right? Where was our stop loss on this trade? Very, very, very tight. We obviously were maybe at I think a 60 pip stop loss on this trade. I could be a little wrong, but it was around 60 pips, right? We are already in profit, right? If you took this trade, already from the execution, which we got at the high, right? We're already up right now 95 pips, right? 93 pips to be exact with this one trade that we took yesterday, right? Already. So this is, I'm not like, this is what I'm teaching, you guys, is that I'm doing this as well, right? So what's going on is that since we took this trade to the at the high of the week, now we're going to formulate where price is inevitably going to go, right? So obviously my execution is going to be 250 pips. Reason being is that I want to see a nice drive to the downside even more, because right now we're just getting the stops hit on basically these levels. The stops are hit on these levels right now, right? Now we have these levels to hit, right? So and these levels to hit. and even these levels to hit, right? So where am I going to put my percentage, right? I'm looking for about 250 pips. I'm looking to see price hit all these stop losses, right? I'm looking for a nice home run, right? Because I know trailing stops, right? People are buying, 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 and buying again, right? Now they're going to hit your stop, hit your stop, hit your stop. That's why I did the 250 pip trail, right? So we're already up 92 pips right now on this trade, you guys. And I just did this trade again on the US dollar Japanese, right? When I literally just did this trade, like as we're live right now, I did this trade prior, like literally maybe a minute before I got into this live stream, right? And then all I did was I did the same thing again. Selling orders are here. I know they're trapping liquidity in two areas, and then now what they're going to do is come back and hit their stops, hit their stops, hit their stops, and hit their stops. That's why I'm long right now, you guys. That's why we're already up profits, because this formulation works. It's been statistically proven that market makers are the 92% of volume out of the Forex market comes from proprietary traders, investment bankers, and institutions, and how they drive price, because they have to make money at the end of the day, and we're just trying to basically fulfill a small amount of profits compared to them, but still at the end of the day, we can make a lot of profitable gains. So hope that this answers some of your guys' questions with trading. So great nuggets. I need to watch over a couple times with a pen and paper. No one, is teaching this information. God. Hey, of course. Thanks, Michael. They really appreciate you, man, being on this live stream, and you've been very dedicated. You've been just very doing all of the work, and I'm really honored just to be teaching here and being a part of Market Traders Profit Club. It's just an honor. So can you excuse me? I can see you with your own prop firm. Thanks, man. I really appreciate it. Yeah, I'm trying to work on something right now. It's something that I've been working on for a little while. And obviously, I'll tell you guys in the near future where when that obviously is more in the direction. So what showed you price was going to be high for the week? Okay, so what showed me price was going to be high for the week was you'll get this over time. It's not going to come to you like easily, but actually it can. What happens is that since I saw that this was basically what, Tuesday, we're on Wednesday right now, right? I'm blanking on time. Yeah, we're on Wednesday, right? So price is now on Wednesday. So the highs of the week usually happen on a Wednesday, right? So I just back tested a lot. So if we were to what we can do, we'll go back into price range and look at times, is that the high of the week, especially when you're trending or trading, is usually on a Wednesday. So when I saw that it was Wednesday, I saw that price was going on these wick formations to the high. I saw a huge escalating non-sustainable upside momentum. I knew that obviously this was just inducing a lot of buyers to go long, and then I knew that it was the weekly high because of Wednesday, huge induced bullish runoff, and then obviously a trap to the downside, or just to trap people to the downside. So that's why I find the weekly range is usually because weekly ranges happen or Monday. So I'll break this down to you guys. This is what usually happens. This is usually what happens. It's not all the time, right? Monday, or actually I'll go like this. So Sunday, this is for Forex, right? I'm talking about Forex right now. Sunday is basically a market trap day. Well, they'll trap liquidity and they'll do market gaps and so forth, right? Monday is usually basically the same thing, where Monday and Sundays are basically market trap days, where they'll trap liquidity and they'll go the opposite way of the real trend of the week, right? And then Tuesday is usually market push, right? So market push, it means that the market is going to push to either way, upside or the downside. Wednesday, oops, I spelled Wednesday wrong. So Wednesday is basically price is going to be either the high or the low of the week, and then usually Thursday is market reversal day, where the market will then reverse to either side of the market, up or down. And then Friday is usually a trap day again. Friday could be a trap day where they trap price at one area, and then Monday Sunday they'll open up it differently, or it's a market push. Well, they'll push price as fast as possible, especially if some of these days, are not not as volatile as usual, right? So this is basically where I determine, and obviously this is the market maker's handbook where I teach you guys a lot of how the market makers trade the market. But I'm going to be going over this over and over again. So don't like feel like you guys aren't able to get all this information at once, because I'm going to be going over this all the time. So, you know, we're going to be looking at this, and we're going to be going over session changeovers and how these formulate all these elements at session changeover as well. So awesome stuff, you guys. Today's been an awesome day. I hope that you guys got a lot of knowledge on price. I hope that you understand where Great Britain pound and the euro is going. If you guys want to take a screenshot of this, be my guest of the daily chart of what I believe the market's going to do. Whoops. And obviously I can put a screenshot in the Discord as well. So right now we see that price is consolidating, making that low, making that M formation, that consolidation at the low. Going to retest those highs possibly before the end of January, February. It might fulfill, and then after we see that, we might see price reverse to the downside, or it might go up and retest. So obviously this is going to be my prediction for the beginning of next year. We're going to start off strong with some nice pip gains, right? And even if this was a high percentage trade, you know, we're looking at about, you know, 1,000 pips almost, you know, to start the new year. So we're going to definitely be going with the signals like crazy on that and how price is going. So Great Britain pound, Japanese yen. Right now, price is either going to go two ways with Great Britain pound, Japanese yen. We can see price evidently going into the downside and testing these lows of previous low right here, right? Having that about 1,000 pip downwards momentum, or we might see pip or price go up to the upside, right? Depends on how much liquidity is wanting to be trapped between this area, right? This high and this low, right? And then having this area being another fulfilled consolidation point, right? So we have this consolidation area, and then we have this consolidation area, and then where does market want to break price? Does it want to trap the seller or stop all the buyers that are going already, or does it want to trap all the sellers that are going in the market already, right? It just depends of where price is going to go. So that's why I drew two things right now. Right now it's a question mark. But Michael, to answer your question, I hope that this basically gives you my hypothesis on Great Britain pound, Japanese yen. And to go over it, right, I'm looking for a breakout to the upside or a breakout to the downside for about 1,000 pips to start the new year, right? And basically, I'm not going to see a nice breakout because it seems like Great Britain pound is already fulfilled on their, or on Japanese yen is already fulfilled on their books, right? They already made a lower low. It's already the 26th. It's basically 3 more trading days left, barely. Like 1, 2, yeah, 1, 2. Basically, just 2 more trading days left in the market. You know, they're fulfilled. They hit their books. They're set up. So that's why I'm not really focused on the Great Britain pound, Japanese yen. But their new year, oh, best believe you're going to see something nice. So we'll definitely see possibly, you know, see that market price is going to go 1,000 pips to hit all these short positions, or we possibly are going to see 1,000 pips to the downside to hit all these long positions, right? And right now it's looking like it's going to go to the downside because it looks like there's a lot more profitable structure than there is in the upside because it doesn't really show a lot of guaranteed momentum, right? So hope that answers your question when it comes to Great Britain pound, Japanese yen, or where price is going to be. And hope that you guys got a lot of information out of this. If you guys like this video, please subscribe or like put the like button. And yeah, so great session, you guys. I hope that you guys are going to kill it this week. I know there's only 2 more days left. Be very cautious. That's why I'm only going to be doing a couple more trades. As you guys can see that I'm already up some gains on this trade right now. We took this trade basically, as you guys can see, my entry was here. I could have got my entry lower. I'm kind of a little upset, not upset about that. You can't really be upset with the markets if you're making money, but I'm not really essentially upset. I just should have saw this earlier. I was on the phone. I saw this consolidation. I saw that it was Wednesday, and I knew that it was going to be a buy. So I should have been in at like 10.4 or 10.5, especially 10.5. If I saw it was 10.5 and I saw it was long, I should have been in earlier. But doesn't really matter. We're obviously already in profit right now. You know, going to the upside, and what should we see is that price is going to test this 11,250 area, consolidate, not that long. It's just going to go straight up and start to test these higher levels in the near future. So awesome stuff, you guys. Obviously, I'm going to re-enter it at 11,250 for another buy order, and then obviously keep on buying at those psychological levels until I see that price is not formulating any more upside momentum. So I'm going to go over being able to leverage in your positions after you guys get a firm understanding how price is working in a certain direction and stuff like that. So hope that you guys got a lot of information on this. If you guys have any questions, please feel free to put in the comments. And yeah, just hope you guys are utilizing these strategies, utilizing these techniques. And yeah, so I'll be in the Discord. I'm going to possibly be putting out that euro signal if I do see that, right as we talked about before. If I do see that setup right here, I'm going to be having that alert on my phone, and basically going to be seeing if the price is going to move up to this level. And if it doesn't break, and I'm going to have to see this happen like between Tokyo session, right? I want to see that consolidation in Tokyo session area. This is going to be Tokyo session. And if I do see that during Tokyo session, possibly we'll see that reversal, right, during London session, or price will then, during London session, we might see that nice 50 to 80 pip drop to the downside, obviously closing in on a lot more profit, right? So right now we took our positions. Right now we're up about, I'm seeing pips we're up right now. We're up around about 20 pips on this trade. A little, obviously, this is in the Discord as well. So we're up 20 pips right now on the USD Japanese yen. We're up about, we're up about 96 pips on 95 pips right now on the Great Britain pound. So right now we're like up 100 pips today, you guys, already on our trade alerts for the Forex, for our Forex signals. So pretty awesome day, you guys, right now, that we're killing it right now. We're killing the market. So make sure you guys are on our Discord looking at those signals. Obviously, earlier prior I was, having a little slump with my signals, so I apologize for that. Definitely going to start to kill it again, get back in my flow. Yeah, so I hope that you guys have any, if you guys have any more questions, feel free to, send a message or send a message on Discord, and I'll gladly respond. So have a great day, you guys, and enjoy your Wednesday. All right, bye. Take care.